Excel accounting practice problem. Adjusting entry, prepaid insurance. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it if you have access to it. There's two tabs on down below, an example tab and a practice tab. Practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. We're going to be doing a transaction related to insurance, recording the insurance expense and prepaid insurance. Now, insurance is a little bit different than other types of expenses we typically are paying for. So, for example, when we pay for the telephone expense or the utilities, at the point in time we get the bill and pay for the bill, that's pretty close to the point in time that we actually incurred the activity, the use of the telephone and the use of the utilities. They had to actually track the usage in order to create the bill. Therefore, we expense it at the point in time that we basically pay it typically, or when we enter the bill into the system. But when we talk about insurance, we're talking about something which by its nature, and this no matter what type of insurance, whether it be liability insurance, car insurance, and so on, we're going to be paying for it before we get the coverage. Noting insurance can be a little bit abstract because you might say, well, I don't really get anything unless something bad happens. I get in a car accident or something, that's when the insurance pays out. But that's not generally the case because you're getting coverage. You're getting the liability protection, but that liability protection is really happening in the future. So if you're paying for it on a month-by-month basis, then you might be able to get away with just saying, okay, I'm just going to expense it at the point in time I'm paying for it. I want to stick with, in essence, a cash basis type of system. But if you're paying for like 6 months of insurance at one point in time, or like a year's worth of insurance, then it can cause you a problem if you were to expense it at the point in time that you pay for it. Because if you were to do so, then if you compared like January to February and you paid for a whole year's worth of insurance in January and 0 in February, it would skew the comparison because you would look like you had a worse month in January when in actuality you have this big expense that you just paid for that's going to be benefiting multiple periods into the future. Therefore, on an accrual basis, what we will typically want to do is put it on the books as an asset and then allocate it over the useful life. Note that this is the same concept that you might do in like furniture and equipment. So when we get to depreciation, it's really a similar kind of concept. You also might say, well, look, insurance, I pay for it monthly, or I'm on a cash basis, and therefore I'm not going to worry about the prepaid insurance. You might be able to get away with that. You got to deal with the pros and cons of it. Then you just got to realize that you're looking at two different numbers and what's the impact when you're judging your performance and so on and so forth. And you also want to consider the tax applications. Do you have to do it for taxes? But it's a useful concept to understand because when we get to the furniture and equipment, you won't be able to get away from it most likely, right? Because if you're buying large pieces of equipment like a car or a building, you have the same concept in play, and the tax code will force you generally to put it on the books as an asset, do the accrual type of thing for the same reason, because when you purchase a large piece of equipment or a building, even if paying cash for it, you didn't actually get the benefit from it at the point in time you paid for it. You're going to be benefiting future periods, and therefore you should put it on the books as an asset and then allocate the cost over the life. And this could also apply to any other thing that's prepaid. The insurance is a classic example because it's always prepaid. So every time you see insurance, that should be a question in your mind. Anything else that you might have a prepayment amount, if you prepay rent or any other type of expense, then you've got a similar question that should be kind of running through your mind as to whether you should put it on the books as an asset and then allocate the expense over the useful life that the asset is going to be used for. Once you've determined that you need to have this prepaid insurance, the next question is, well, how do I do that? How do I set that up? And typically what you do is you say, I'm going to do the accounting process and not actually expense it at the point in time that we pay for it. Instead, we're just going to set it up to go to the asset account of prepaid insurance. So you can see that's what we did here. So that means every time you write a check to the insurance company, it should be automatic in like a QuickBooks system or something. It just automatically goes up to the prepaid insurance instead of going into the insurance expense. And then we plan periodically to go into this account and say, okay, how much, and that would be at the end of the month and or the end of the year, to determine how much time has passed in accordance with the coverage of the insurance policy, and determines how much of this insurance has been consumed at this point in time and how much has not yet been consumed. So that'd be the general concept. Now note, you might have some people, like if you're doing adjusting entries, that just expensed the insurance and you have to adjust for it. Then you just do the opposite. You say, okay, they expensed the full amount of insurance. How much of it should be prepaid in accordance with the coverage of the policy for the amount of the policy which has not yet been incurred? And then you could adjust it that way. But if you're setting up the system, this is how you would typically want to set it up, having every time they write a check, it goes to prepaid insurance. Okay, so let's go back to the practice tab. If this is the case, and we look at our books and we say, okay, there's the 12,000, all we have to do at that point in time is determine how much of that insurance should have been consumed. We would look at the insurance policy. I'm going to imagine the insurance policy here was a 12-month policy, which we paid $12,000 for to make it nice and easy. And we incurred the first month, we're going to say in February. So we're imagining we paid for it sometime at the end of January or February, and then we're going to basically have the coverage from February of the current period 12 months out to the following, February of the following period. So that means that we have 1 month that has passed as of this point in time. So if we take that $12,000 for a year's worth of policy divided by 12 to get the 1 month that has now passed, it would be $1,000. So I'm going to say, all right, then let's do our journal entry down here. We're just going to call this on 2/28 as of the cutoff date. We're going to be debiting insurance expense, which I might not have yet. I don't think I have insurance. I got to add insurance expense. It's going to be right under the banking. And note again, if you're putting this into a software like in Excel and you expect it to go into accounting software, you'd like to try to add the accounts as you expect them to be seen when you add them to the QuickBooks software. And also realize that you might want to look at the software too and see if they have an insurance expense that's in the software that hasn't been used, and see what the name is, because the report that you have might not have anything in insurance expense. And if you create another account, then you're creating unnecessary accounts when they actually record it into their like QuickBooks system or whatever. And when you do add accounts, then if you don't have account numbers, it's generally going to be in alphabetical order within the expenses. So I'm going to try to keep that convention, so as the years pass, we don't have our expense accounts in all these different orders when we're trying to work on our worksheet. So I'm going to say insert. We'll insert our cells here, shift these cells down, and I'm just going to call this insurance expense. So insurance expense, and we're going to say 0 here, and then I'm going to copy down the formula in the adjusting. I'm actually gonna try to hide the reversing entries right now so it doesn't mess us up. I'm gonna select these two, right click and hide those so that doesn't get in our way. Notice when I do add an account, like if I was to add that account again, I would want to make sure to pick up this other little cell over here so that it picks up the hidden cells up top. I sometimes forget to do that. But when you hide the cells, you want to kind of keep that in mind if the hidden cells are right next to when you're trying to insert something new. Okay, so now we can go up top and I can say, okay, now we got the insurance expense is going to be the debit insurance expense, and the credit is going to be the prepaid insurance. Prepaid insurance. And I'll do the calculation. Let's indent down here. We'll do the calculation again, which is simply going to be equal to 12,000, the policy amount, divided by 12. 1 month has passed, which would be $1,000. So I'm going to make that the debit and the credit. So there's the debit and then the credit. Let's post it out. Here's the insurance expense. That's down here in insurance expense, right there. AM30. Scrolling over to the insurance expense, increasing it. That, of course, increases the net income, puts us out of balance. Then the insurance, prepaid insurance, which had 12,000 in it, we're in AM8 equals, scrolling down to the 1,000 and enter, bringing the 12,000 down to 11,000, which makes sense because we're basically 1,000 per month. There's 11 months left, so 11 times the 1,000 should leave us with 11,000 prepaid that we're going to consume as the policy proceeds into the future, continuing the adjusting entry $1,000 per month. lowering the prepaid insurance as time passes and recording it into the current month. So there's our adjusting entry. Notice this one is a permanent adjustment, so we will not have any reversing entry related to it because it's a permanent type of adjustment. So then we're going to go up top and let's post it to our GL as well. So we got the insurance expense. So that's the new account. We're going to have to add that new account in our GL because it's new. So it's going to be over here somewhere in the general ledger. It's going to be right after the bank account. We got the space down here already, just waiting for it. So that was, yeah, that's right where it needs to be too. It's just perfect. So we'll copy this one. It's almost like you planned. I didn't even plan that. You might think, well, that's because you planned it, but no, I didn't plan it that way at all. That's just the way it happened. And so then we're in DA14, DA14 equals, and we'll point this over to the expense account over here, way over here, way over here, which is going to be the prepaid insurance. I'm trying to get the name, not prepaid. This is just the insurance expense, There we go. There's the name. And so this is an ADJ, we're going to call it an ADJ, which is as of the end of the time period, 228. We're on DB17, DB17 debit. So this is going to be equals left to the wall. And we will then be picking up the 1,000. There it is. And so we also need to add this account to our check number up top. So it's picking up our check number. So our check number should be out of balance right there in that green. It should be not in balance. I'm going to double click on it, all this stuff in it. Plus, it's a mess. But I know how it works. I know where everything is. It's like just like my desk. It's not a mess. Everything's in its place, that thing. So then we're going to be down here, and we're picking up the the prepaid insurance, or the insurance expense in CD24, enter. Back in balance again. Now we also need to record that in this check number, which is tying out the GL net income numbers to the net income down here. So I'm going to double click on this 4797 and add to the end of it, say plus, and this is the insurance expense. Let's get it right this time. Get it right. Get it right. There it is. It's down here. I'm going to go to the bottom of it, that 1,000, and enter. So there it is. So that one's good because now we're at the 3797. That matches our net income on the year-to-date stuff down here. Looks good. Other side, going to the prepaid insurance. That is the fourth asset account. So it's going to be the fourth account in the GL asset accounts as well. So we got the prepaid insurance in B. It's in BBF. BBF. So we're going to say this is on an ADJ. BBF 5. BBF 5. B and BF 5. We're going to go back to the left, scrolling down. And then we'll pick up the prepaid insurance, bringing the balance down from 12,000 down by 1,000 to 11. That 11,000 should match out what's on our trusty trial balance, as indeed it does. So that puts us back in balance with the GL up top. We're in balance on the trial balance down below. It had an impact on net income. Here's our full impact thus far. Net income 4770 goes down by the 973 to 3797. Notice that a lot of these adjusting entries often has a decreasing, like a lowering effect on net income, which could be good or could be bad depending on what they're for. Meaning, if you're doing this for taxes, that could be good. Right? If you're doing this for someone's trying to get a loan, then they're trying to look good because they're trying to convince the bank that they're credit worthy and so on. And lowering their net income will make them unhappy. So you can't win as the adjusting accountant over here because they want it to go up for when they want a loan and down for taxes, and those are opposite directions that you can't go opposite ways at the same time generally. So let's add a note here. We can then say let's add a note, say new note, and we're going to say this is to adjust for insurance expense. We had 1 month past of 12 month policy And so let's leave it at that. Something like that. You might want to put the actual, amount of the policy, the date, the term of the policy, and then kind of how you calculated the 1 month. Although we can also see the calculation kind of right here, but you could put that into the notes to make it more clear to yourself in the future, to somebody else, and or to the next person that's going to be doing these adjusting entries possibly in the following year or following month. So this is where we stand now with our adjusted balances thus far. There we go. Thus is very far. So we're at the 3797.